Hey there, and we are live for Profit Growth Strategies, and it's going to be a wonderful event. Kenny Harper here, along with Michael McCormick.
Thanks for having me, Kenny.
And thanks for being here and tuning in. We're going to just go ahead and jump right into this so we can deliver the content. And I'm going to start with just getting my screen share going. Perhaps could have done this earlier, but we got it going now. Hey, that's interesting. All right. Michael, does everything look like it's coming in good to you on your end?
Looks loud and clear.
All right. All right, so this is how to gain more customers and increase your bottom line. And today we're going to be sharing some strategies that you could use to obviously gain more customers and increase your bottom line. Now, the problem is, if you're tuning in right now, this is post-COVID-19 pandemic. And there's been a lot of disruption. There's a lot of people who are in fear. They're not doing the things the way they used to do. There's been changes in the market, and people are looking for direction and guidance to know what they could do. Now, some people have lost revenue. Some people are no longer getting the same amount of customers they had. So we've got to look for different solutions. See, when things become unpredictable, that's when people get scared. They don't have a plan. They don't have a way to move things forward. And if people are lost, they're not knowing which way to turn, which direction to take. It's wasting a lot of time, and time is money. And if you're not being effective with what you're doing, or you're not paying attention to what you're implementing or the money you're spending, you could just be burning revenue, and no one could do that for a long period of time. So our objective today, where we want to go, is we want to guide you with some ideas that you could put into your business so you can create some predictable growth. Okay. We're going to provide some strategies that will help give you direction and clarity on where to go and what actions you could take so you can be proactive. Also, we're going to share some strategies to make sure that your business is profitable. You know, you put a lot of time, energy, and passion into building a business. You want that business to be profitable. So who is this webinar for? This webinar is for small businesses who are looking to gain clarity and direction, who are looking to attract more customers, or increase the bottom line. And this altogether will help you maximize your time and energy. So our goal is to provide you with a framework for maximizing your business and put you on a clear path to achieve your goals. Now, here's the really cool thing. Because we're doing a joint webinar today, we have expertise from two different angles. I'm going to be sharing some ideas from the marketing and sales side, and then Michael McCormick is going to be sharing some ideas from the cost-saving side, from the financial perspective. And when you attack a problem on multiple fronts using proven, tested methods, the chances of near-term dramatic success increase exponentially. So Michael McCormick, he is a certified public accountant, a financial growth expert, and a small business consultant. His business is Financial Clarity Group, and you can learn more about his business at financialclaritygroup.com. But Michael, if you wouldn't just take a quick moment to say hi and introduce yourself.
Thanks, Kenny. My name is Mike McCormick. As Kenny said, I'm based out of Cincinnati, Ohio. We specialize in working with small business owners to help them keep more of what they earn and what they create. What we've found is that most businesses operate on the default system, and that means that they just take the tax code as it comes and aren't incredibly proactive in finding ways to keep more money in their own pockets. And what we try to do is help them look for mistakes and missed opportunities in prior year returns and generate tax savings for themselves to help fund their retirement, work less, and provide for their kids' college educations. So hopefully we can show you some ways to do that today.
Excellent. And I encourage you, whenever you're doing, whether you're watching this in a replay or you've taken some time to watch it, stay tuned in and take some notes. Far too often, it's really tempting to surf around and check different things out, kind of like listen to something in the background. But I promise you, if you're really paying attention, you're taking notes, and you actually implement some of these ideas, they will help you generate more revenue and keep more of the revenue as profits. So make sure that you're doing that. And just to introduce myself real quick, I'm a profit growth consultant, a certified marketing advisor, and a customer acquisition specialist. So my company is Rock My Image, and I've been working this growth amplifier movement. And it's really my focus to help you look at new ways to grow and generate new business, but also grow and expand the business that you have. So again, I'm going to talk about building up revenue, and then Michael's going to talk about how you can keep it. Because if you're making it, but you're not keeping it, that's not a lot of good. Yes, Mike?
Nope, I was going to say it's much more fun keeping it.
oh yes. You definitely want to be keeping more of the money you have. Now, one of the reasons that we do this and we share this information is because we want to provide value. We want to build relationships with those we serve. There are people out there who are seeking this direction, and we realize that when we help provide value, that gives us the opportunity to potentially win business or referrals. And we follow Zig Ziglar's wonderful philosophy. You can have everything in life you want if you'll just help other people get what they want. So we're giving here, and really encourage you to make sure that you're writing things down and taking new actions to achieve new results. So I want you to think for a moment. Have you ever heard of the 20-20 rule? Now, if you're looking at the screen, you probably can see that, you probably heard of this rule, right? It's where 20% of your effort leads to 80% of the results. And this is a kind of a rule that just happens to work in the environment, in nature, in business. It kind of just works. It's a rule. So 20% of the actions you take on a regular basis produce 80% of the results. 20% of the clients you have typically produce 80% of the revenue. This is really important to know, because when you put awareness and focus on the 20%, you can be more effective. We're going to show you what that 20% is today.
It's almost a rule of nature.
Right. It's a rule of nature. It's just how things are. And here is the profit growth formula. We're looking at 5 key profit drivers. And these 5 profit drivers are the 5 areas in your business that are the 20%. And it's really important to know these, to understand them, and put your attention to them, because when you put attention to something and you take new actions, you're going to achieve new results. And this is a really important factor. Small incremental changes, small little tweaks to what you're doing now can produce big results. The saying goes, small hinges swing big doors. Now we've got the 5 profit drivers are lead generation, sales conversion, number of transactions, average price, and profit margins. I'm going to give you an example here in just a moment. All right. Here we're going to be looking at setting a benchmark. Okay. We're looking at the 5 profit drivers. And the numbers that I'm going to put on the screen may be completely different for your business, but the same formula is still going to apply. Okay. Now, if you're in business, you got to have leads coming in. You got to have potential customers before you could have customers. So say in this example, we get 1,000 leads in per year, and its leads are potential customers, but you got to convert those leads into paying customers. Now, conversion rate is the percentage of leads that become customers. So out of 1,000 leads, if you have a conversion rate of 25%, that's going to be 250 customers. Now, the customers you have, it's a great way to say, all right, now I have customers. Well, the revenue that you generate depends on the number of transactions they have with your business and the average price per transaction. That's going to generate the revenue. And as we said before, and we're going to put a lot of focus on today, it's not how much money you make, it's how much money you get to keep. So we want to look at the profit margin of where your business is so we can calculate what your profits are. Now, regardless of what your mission is in your business, you need to focus on profits, because you need profits to continue to run your business, and you need profits and able to grow your business and serve your mission. Even if you're a nonprofit, right? Even if you're a nonprofit, you need to be making more money than you're spending. Otherwise, you're going to be out of business and you won't be able to serve what's important to you. Now, a lot of people think if they're looking to grow their business, they're going to need to generate more leads. They're going to do a lot of marketing and generate more leads. Well, in this example, what I've done is illustrated what that would do if someone generated 50% more leads and everything else stayed the same. This would be pretty much a 50% growth on where they're at and where in their profits. So that's a possibility that you could do from generating leads. Now, here's where the really cool part comes in. So if you're taking notes, make sure that you're taking notes here and see how this applies to your business. If you look at the profit drivers and identify where you're at in each of these areas, and then make subtle changes to increase even by 10%, look at what the difference is. I mean, we're talking about going from around 1,000 leads per year to 1,100. Changing a conversion rate from 25% to 27.5. All of these changes are very minute, very small, totally feasible, but the growth is huge. Now, I want you to think for a moment, which of these is better? Focusing on just generating more leads or really looking at the five drivers? Now, you definitely want to generate some more leads. You got to grow your business. You got to have new customers. But here we have 50% more leads because it requires a lot of advertising. It's going to increase costs, and it's going to take more time to process all those leads and customers. Where if we really focus on the five drivers, it's a 10% increase in each of the drivers. It's typically less cost to do this, and it takes less time, and it's overall more profitable. So which one is better? Focusing on leads or looking at the bigger picture and being really purposeful on the five drivers?
Each of the five drivers has its own lever to profitability. You know, whether if you can increase your prices just a little bit or decrease your costs without increasing the amount that you spend to bring in new clients, it all goes to the bottom line.
Exactly. So that's what we're going to be looking at today, is giving some ideas of what you could do to increase each of these areas. So question, are you ready to grow your business? I say, yes, I'm ready to grow my business. And some people sometimes get concerned because they think, oh, I don't necessarily want a lot of new customers. Well, then you could still grow your business by expanding the lifetime value of your customers or just working on making it more profitable. But we should always be thinking about growth, because if you're not growing, you're dying.
Natural attrition in your business.
Right. There's always going to be attrition. Even if you're some of the greatest business providers out there, things change in people's lives beyond your control. We have people going out of business, people retiring, things becoming less effective. We have pandemics, right? And so it's really important to know that. And so one of the key things that we're going to focus on today is about setting goals. And this is a quote from Tony Robbins. Setting goals is the first step in turning the invisible into the visible. And what I ask people to do here is to take a step back and think, have you taken the time to really think about what your goals are? And we looked at the 5 profit drivers a moment ago. Are you tracking those numbers? Do you know your numbers? Do you have goals to improve in each of those areas? Are you being strategic to improve in each of those areas? And if you're not, this is creating the possibility of a new future by taking new actions. So Michael, just a quick question for you. When I'm talking about numbers and knowing the numbers, what's a challenge that you typically see with small business?
It comes down to time. In a lot of cases, most clients don't have the time, don't create the time to review their results of operations. They haven't set clear goals because, number one, they may not understand what the numbers mean. Mm-hmm. So whether they've achieved success or not hasn't been defined because they don't know what the numbers mean. But it's a lot of time it's just creating the capacity, if you will, to actually sit down and look at what's going on in their business with us even,
right.
To engage their advisor to go through the documents with them so that the client has a better understanding what's happening in their business. That's one of the big problems.
So I'm highly encouraging you, regardless of where you're at in your business, connect with an advisor and make sure that you're reviewing your important numbers. It doesn't take a lot of time to just look at them, see where you're at, and you could really uncover a bottleneck or something that is a challenge that you don't even have awareness of, or uncover some opportunities that would be really easy to change and bring it into action if you're just putting the time for awareness. And there are advisors like Michael or myself know exactly where to look to make that process really easy and simple. So that's what we're going to talk about real quick are the 5 steps for success. If you're taking notes, write these down. The first thing you want to do is gain awareness. If you don't take the time to stop, look, and see where things are at, you're not going to know what you could do to change course. And you've got to do this in business. There's mega giants, companies that you would thought would have never, ever gone under, have gone under because they didn't take the time to look at their numbers and be proactive before it was too late. So number 1, gain awareness. 2, when you have awareness, and that's what we're doing today, is giving some awareness of what is possible. What are some things to look at? You want to really take time to assess your present state. Where are you strong in? Where are you weak at? You want to identify where are bottlenecks, where are opportunities. So we're going to assess your present. We're going to ask you some questions to assess where you're at today in some of these areas. So you definitely make sure that you're tuned in and you're writing these things down. And then when you have assessed your present, you want to be able to create goals of improvement. So you could say, all right, here's where I'm at. If I did this a little bit better, or improve this by a little bit, or reduce this by a little bit, here's what the end result could be. So I'm going to create a goal, and then I'm going to take action. A lot of times I hear far too often from businesses, oh, I kind of already know this. Oh yeah, I've heard this before. Or, this is something I know it needs to be done. Well, it doesn't matter what you know. It matters what you do. And more importantly, it matters the results you get. So take new action and then follow through. The other big challenge, rampant challenge I see, especially when people are fearful or having struggles, is lack of follow through. They start something, they get it moving a little bit, and then shiny object, distraction, something happens, and then there's no follow through. So those are the 5 steps for success. Take a screen share, write them down, but make sure that you're implementing these things, because if you don't take new actions after watching this training, then you're not going to be able to benefit from the results that you can get. All right. Are you ready, Michael?
Absolutely.
All right. So the first thing we're going to talk about is growth, and we're talking about leads and sales. Now, if you're looking to grow, one area you can grow in is growing the value of your current customers, and the other way is to gain new customers. That's where we're going to start off first, is gaining new customers. Now, if you already have a lot of clients, maybe you should focus on expanding the clients you do have first. If you're lacking clients, then you need to gain new ones. It really kind of depends where you're at. And I love this quote by Sun Tzu. Strategy without tactics is the slowest route to victory. Tactics without strategy is the noise before defeat. So sometimes in presentations, I'll ask which one's more important, strategy or tactics. Michael, what do you think?
Strategy.
Right. You got to have strategy first. You got to have a strategy. And then you got to have the right tactics to implement it. But you got to have a plan. And that's what we're going to be giving right now as a focus. What I'm introducing you right now is a proprietary digital marketer training concept. It's called the Growth Triad. And there's 3 main components. The first one is the documented journey. I'm going to share with you in a moment what that is. The second one is actionable metrics. And now these are the things you're going to pay attention to make sure that you're gaining traction with your documented journey strategy. And then last but not least, the tools and tactics. Once you have the strategy, you know what you're going to be tracking to make sure things are, you know what you're going to be tracking to make sure things are working. You want to make sure you have the right tools and tactics in place to achieve the results. Now, it's important to have all 3 of these working together. If you're missing one, it can cause results not to come into play. For example, let's say you had a documented journey, you have a strategy, and you're paying attention to the metrics, but you aren't using the right tools and tactics to execute. You're going to be stuck in the mud. You're just not going to be going anywhere. Now, let's say you have a documented journey, So you know what your strategy is and you have the right tools and tactics, but you're not paying attention to what's working and what's not. You're not tracking it. You're going to be like a bull in a china shop. There's a lot of activity, but you can't tell what's hitting and missing. And then last but not least, if you have the tools and tactics in place and the actionable metrics, but you don't have a documented journey, then you're going to sometimes get results and sometimes not. The documented journey is what makes things consistent. That's how we're going to achieve predictable growth. So I'm going to start and share a couple of things that you can implement from the documented journey perspective. Okay. Here's the customer value journey. In the bottom left-hand corner, our customers or potential clients before they've received your product or service. They have a challenge. They have a pain. They have something that they want to get. And up in the top right-hand corner is the after state, after they received your product or service. And the process here is to guide people seamlessly and subtly through the different stages of the business systematically. Now, this happens organically on its own, but when you can document it, you can orchestrate consistency. Michael, wouldn't you agree that having a consistent process is really important?
Absolutely.
To take time to do.
Yeah. It documenting it also expedites the result if you have a documented process.
Right. Far too often, people try to jump the stages. They don't do it consistently. Then it can't get consistent results. So real quick, let me walk you through these steps. The bottom left-hand corner starts with awareness. People need to know that you're there. Then it moves over to engagement. You've got to be able to engage, build a relationship, get to know the person that you're talking to. And then your goal when you're engaging with someone is to get for someone to raise their hand and give you their information so you can continue the conversation. That's the subscribe stage. When somebody has subscribed, you can now continue the conversation and guide them to the convert stage, which is when someone may give you a little bit of time or money, showing that I'm not just interested, I'm in action. The convert stage sets up the excite stage. This is when a customer or client can receive some initial value from a transaction. So if you did a consultation, they can actually benefit from the consultation. Say, wow, I've gained some awareness. I could see how you could help me with my problem. Guiding them to become a customer, being able to expand that relationship, retain that relationship, extending the lifetime value of a customer, and building advocates and promoters. So all the way up the chain. Okay. And we're going to go over that. Now, here's where a lot of people think you should start. Oh, I want to gain new customers. I'm going to start by generating more awareness. I'm going to advertise. Well, in the customer value journey planning, we don't want to do that. Because if you haven't mapped out your journey, if you don't have a process, a system that seamlessly guides prospects to become customers that pay, stay, and refer, you could be pouring water into a leaky bucket. So the best process is really to begin with the end in mind, know where you're wanting people to go, what services you're going to offer, and then reverse engineer your process. Then you can focus on creating advocates and promoters. So we're going to start off, as we're thinking about leads and sales, with question number one. How do you qualify prospects? How do qualified prospects find out about your business? We're thinking about the awareness stage. Michael, I'm sure you've probably run across some businesses that maybe they started a business and then before you know it, they're like, I don't have any customers.
They ran through their database pretty quick.
And they're not putting the message out there. Well, if people aren't aware that you're there, then you're going to have trouble getting new business. So you need to have some sort of marketing strategy that takes your marketing message and puts it in front of your market. Now, depending on which business you're in, if you're working with a lot of businesses doing B2B, you might use a strategy like on LinkedIn or some sort of online advertising. If you're doing both businesses and consumers, Google Ads and YouTube could be a good solution. And then if you're working with consumers, Facebook and Instagram might be better off. Give me a quick case study of an IT service company. It was a B2B company, and they do a lot of service for businesses. The challenge was they're a new business. They launched, they had no leads coming in. Nobody really knew they were there. So the solution was to create some Google ads for people to search for keywords, and then YouTube retargeting. So if you're not familiar with what that is, so when we go to a search engine, type in a few keywords, something about IT in their local area. They would get an ad, click on the ad, and they go to a website. So sometimes when somebody's visiting a website, they'll contact the person. Sometimes they're just browsing around and they don't take an action. But with retargeting, you could then have a video pop up and show when they're on YouTube later or looking around on the internet later, and continue to follow around with your marketing message, increasing the likelihood that they'll do business. So working with this IT company, we increased their visibility to thousands per month, and they gained awareness, started generating leads, and obviously started gaining return on investment. But you've got to have a strategy for how you're going to get your message to your market. So that's awareness. Go ahead.
I was going to say the piece that I think a lot of clients miss, or a lot of people miss, is what do they do with the lead once it comes in? I know you're going to cover that, but that's they get the lead, but then it drops. Just goes into their CRM or their database, and no action's taken to stay in front of that potential customer.
Well served. Good timing, Michael. That's actually a big challenge. Is sometimes we've worked with companies and we've generated a lot of leads, and we've heard the feedback from a roofing company one time that said, you guys proposal, and then some of them do business and some of them don't. Do you follow up with those people? Crickets. If there's not a follow-up process, then you could be spending a lot of time generating leads, but not really guiding them to become customers that pay, stay, and refer.
It's a very expensive proposition. Very
expensive. And this whole, these stages above you that we're walking through, and we're going over just a few of them today, they're all really key components to maximize any marketing or advertising that you're doing, whether that's network marketing, social media marketing, digital marketing, advertising, whatever it is that you're doing. You want to make sure that you have this in place so you can maximize your time and investment. All right, so we're jumping over the engage stage, which is a key component. You want to have some sort of strategy to engage with your prospects to guide them to subscribe so they know the value that you provide. In the subscribe stage, you're really trying to generate leads. Sometimes asking people for their direct business isn't going to work because they're looking for answers. They're inquiring. They're not quite ready to become a customer. So here's the question you want to ask yourself. What valuable chunk of content can you offer in exchange for the contact information and permission to follow up? So this can be a white paper. This can be a download. This can be some form of guide or video that they can watch that provides immediate value, whether that's entertainment or information, giving their contact information to you so that you can follow up and guide them to the next step, which is the convert stage. So a quick case study here. We worked with the Vein Center. Their challenge was they were spending huge money in advertising and they were getting a poor ROI. And we looked at what the process was, and they were just putting money on TV ads, radio ads, online marketing ads, and guiding people right to their homepage of their website. They had a contact form and a phone number, but they didn't really have any lead generation assets. So what we did is we created some lead generation assets, such as an assessment and some downloads, and also added some automated marketing software and increased their lead generation by 67%, because people who are going there may not be ready to set up a consultation, but they could easily fill out a quick assessment. And this focus to get more leads drove more interaction and led to more sales. So this is another value, is that by creating these surveys, this increased people's comments and sharing, which really made a big difference in the long run. So we've just talked about the first leg of the customer value journey, the awareness stage. We've mentioned the engage stage and the subscribe stage. Now we're going to move over in just a moment to how to expand where you're at with your current customers. So more leads and conversions, write this down. The key to having more leads and conversions is having a compelling offer and integrated follow-up system. So you want to make sure that you have an offer and some sort of follow-up system.
I would add integrated automatic follow-up system.
Right. Automated systems can save you a lot of time. So take a quick moment to rate yourself on a scale of 1 to 10 where you're at when it comes to lead generation and conversions. And then also, if you want to write down at least one idea to implement, that would be great. And if you have questions, we're going to be available for questions afterwards. And we're also advisors that offer consultations to help people with how these ideas apply to their business. Now I'm going to move on to the next phase that we're talking about today, which is expand. And then we're going to be going to the third phase, which is all about, optimizing. So expand, we're talking about transactions and prices. Now, here's the question that I want you to think about in the convert stage. Now, how can we get your prospect to make a micro commitment that gives us the opportunity to deliver an aha moment? So an aha moment is when somebody really can get, oh, I see how you can help me with your product or service. I see how your product or service really can help me get the thing that I want or get rid of the thing that I don't want. So we want to get someone's time, either a little bit of time or a little bit of money, to take them from being interested to actually being in action. And here's an example here, a quick case study from a senior care center. Now, she is Jamie Glavich, and she operates different senior care centers here in North Florida. And her challenge was she has large competitors with larger ad spends, and she was generating leads, but they were not converting into sales. And so the solution that we created was creating a caregiver kit in a webinar. So a caregiver kit is something that she could sell that at a small price that would provide value to the caregiver, immediate value to the caregiver who's looking for answers and solutions. She can also give it away too, and then guiding them to a webinar where they'll spend a little bit of time, an on-demand webinar, by the way, a little bit of time learning about how she could help them with their challenges. Now, I remember the day when she came in and said, we're generating all these leads, but they're not good leads. We said, let's look at what you're doing to convert those leads into action. We implemented the solutions, and she saw an immediate increase in sales conversion by 42%. So it's really getting those lead conversions to become actual paying customers. This is just her and her book. And when she was able to put the time and energy to present these ideas, it really made a huge difference on how she was being perceived in the market. All right, so now we're going to go over the last question in this first two stages, and this is the ascend stage. Now, again, the convert was all about getting someone to exchange a little bit of time or a little bit of money to be in action, to give us the opportunity to excite them, to show them where we could take them. And the ascend stage is all about what is our core flagship offer and how will we continue to deliver value after the first sale is made. So many times, too many times, the business owners get so focused on getting new customers or just servicing the customer, they don't think about the long-term value of a customer. They don't take the time to remarket to their existing customers. It's a lot of missed opportunity. And do you want to know what the number one reason most businesses lose business? Michael, can you take a guess?
They don't stay in communication with their customer.
Yes, perceived indifference. They don't stay in communication with their customer. They pretty much kind of like, oh, we went on a date, we had a good time, everything was great in this honeymoon period, and then after a while, it's like, well, we're on to new people. We
got paid and we ghosted them.
Right. So it's really important to stay in constant contact. That's the whole software built on the idea of staying in consistent contact.
And part of that is making sure your clients know everything that you can do for them. Exactly. It's not enough to sell them just your core offer. It's extremely important to educate them on all the areas that you might be able to help them, or be able to help them find the help they need in other areas.
It's so important, and it may even be overlooked because people think, oh, they've done business with me. They're bound to know the other things I can offer.
Right.
And I can't tell you, I'd say 9 businesses out of 10 fall guilty to that, kind of get in this tunnel vision and forget to say, let me remind you of the other things that I do offer, how these other ways that I can help you. Because remember, if you can just make those small incremental changes to get people on average to just do just a little bit more with you.
Yeah, they're already accustomed to spending money with you.
Right.
Taking that additional step to engage them in another service, you probably don't have to spend any additional ad money to encourage them to do that. But you have to let them know that you're able to be there for them.
Exactly. You've got to let them know what it is. So here's the example for this Ascend stage. We are working with a consultant who actually works with both consumers and businesses. And the challenge that they were facing is they just had a lack of time and they were competing on price. So that the focus that we worked on is to elevate their program and adjust their business model. And this multiplied their customer lifetime value. So rather than them focusing on, I'm just going to sell you this consulting piece and then move about my way and can kind of go on to the next customer, they said, I've got a whole program that I could walk you through, and it's going to be continuing revenue. And it just took the time for them to step back, see how they could provide more value to their customer, and then present that as an opportunity. And it's multiplied. It's just, this saved huge amounts of time because they didn't have to always vet for new customers, and it's way more profitable. So totally possible for a lot of businesses. And if you're not sure how to do this for your own business, that's where we could have a conversation. It would make sense to see what is possible for you and your business. I've had people that it didn't seem like they could do that in their business. A wildlife removal company, you would think, oh, they can't do that. It's possible in almost any business. So again, we've been looking at the different stages of the customer value journey, and we've been talking about how you can increase your transactions and your prices. And that slide looks like it may need to be replaced. So we want to make sure that you're focusing on increasing your transactions and prices by having a plan to stay in contact with your customers and let them know the other value that you could provide. So take a moment real quick and rate your proficiency towards increasing the number of transactions and prices. And take a quick second to write down one idea to implement. So 1 to 10, where are you at right now with transactions and prices? And then write down one idea to implement. And then we're going to pass the mic to Mr. Michael McCormick.
Going to try to pick up the screen share there.
All right.
I think it worked seamlessly almost.
Yes.
How about that?
I think so.
That never happens.
I know.
Worked flawlessly in testing, though. Okay, so we're going to switch gears a little bit here, and we're going to talk about profit margins and reducing costs, and we've got a couple of ideas on ways to make that happen for business owners. We've got a quote here from Robert Kiyosaki that says, "It's not how much money you make, but how much money you keep, how hard it works for you, and how many generations you keep it for. It's about creating a legacy with the assets that you generate and create in your business." So we're going to talk about overlooked profit. We're going to talk about reducing or eliminating discounting. We're going to talk about raising our prices. And we're going to talk about one of my favorite topics, some tax planning. So again, my name is Mike McCormick. My company is called Financial Clarity Group. I'm a certified public accountant, a growth expert, and a small business consultant. We could throw a financial advisor in on top of that as well. Our website is financialclaritygroup.com, and we're based out of Cincinnati, Ohio, but we do have clients across the country. I'm guessing probably 15 or 16 different states. So we want to stop overlooking profit. And I'm going to talk about some assertions or make some assertions up front that we'll talk about. One is, if you're a product-based business, you're probably missing discounts from your vendors is costing you. The second assertion is that cutting prices can be deadly to your profits. And the last one is that tax planning can help you rescue dollars that you would otherwise send to your silent partner, Uncle Sam, or your state maybe. So let's talk about early payment discounts. and early payment discounts are margin enhancers. They're free dollars that your vendors make available to you, specifically when you're a product-based company. And what we're looking at are situations where you don't take the early payment discount that's offered to you on an invoice. And what I'm going to talk about is an example where we have 210 net 30 terms on an invoice. What that means is that if you pay the invoice from the vendor within 10 days, you can deduct 2% off the price of the cost of the merchandise that you bought. If you don't pay it within 10 days, you have to pay the full amount of the invoice. What's not taken into consideration is that not taking that discount is like borrowing money at 30%, 36% annual percentage rate. How many businesses could survive if they were borrowing money at 36%, Kenny?
Wow, that is insane.
That's worse than credit cards.
That's like we're saying, small hinges swing big doors. Those little things you'd think, it's not a big deal. Huge.
Exactly. Yeah, 2%. Who would have thought? So the math on that is 365 days divided by 20 days gives us 18 20-day periods a year. Times 2% gives us a 36% APR. It's real dollars. So what that looks like, if we consider a case study or an example. So I have a client who has currently about $3 million in inventory. Our example here is going to be $2 million. So what if they were missing out on the 2% discount on just half of their average inventory, $100,000? What that means is that they've missed out on or sent to their vendor $20,000 that they could have kept for themselves. $20,000 that could have been used for rent, could have been used for funding their retirement plan, could have been used for employee raises, or it could have been just kept in the emergency fund. But it's $20,000 that was sucked out of the profit of the company.
Huge.
I saw you cringe there for a second, Kenny. That's a lot of money. So what if they would have been able to get the 2% discount on all of their inventory? The number would have doubled. These are real dollars. This particular client called me one day. This is about 3 years ago. He called and he said, "Hey, should we be taking these discounts our vendors offer us? Like 2% and 4%, all this stuff." I said, you're flushing money down the toilet if you miss these discounts. It's imperative that you take them. It's better to take a little bit of money against your line of credit and take the discount than it is to miss the discount. It's just dollars that go right to your bottom line. Wrong button there. They cut right into the profits. So now we talk about discounting your sales. Let me back up 2 slides and set this up correctly. So now we're talking about, I think I missed a slide there, Kenny. We're going to talk about price discounting. We want to stop discounting our prices. So if we offer something for sale for $1,000 and it costs us $800, that means we have $200 in profits or a profit margin of 20%. Now, the thing is, if we discount our sales price by just 10%, okay, so we're taking 10% off the $1,000 or $100, that means we've slashed our profits from $200 to $100. It's catastrophic to businesses. Now, in some cases, you want to discount to generate cash flow or something like that. But from a profit standpoint, it's just catastrophic. We want to stop discounting in our companies. So what do we want to do instead of discounting? Well, we'll talk about to achieve $50,000 profits in this particular example. Before we took that 10% discount, we had to sell 500 units of our product. Now we need to sell 1,000 units of the product to create the same amount of profit, the $100,000 or the $50,000. We've doubled the amount of work that we have to engage in to create the same amount of profit in our business. That's not fun for anybody. So rather than cut prices, we want to do what Walt Disney calls plussing. We want to add value to the thing that we're offering to our marketplace. And we can do that in a lot of different ways. So one, we want to raise our price. Don't want to discount it. So we have that same have a $100 product with a 30% profit margin. That's a $30 cash profit in our bank. If we raise the price on that 10%, it goes up to $110, but our profit goes up to $40, a 33% increase in profit. Under the old price, we needed to sell 33 1/3 items to generate $1,000 in profit. Now we only need to sell 25 items to generate the same $1,000 in profit. What that means is we can have a decrease in our revenue potentially and still come out ahead. So the common questions when we start to talk about raising prices are, well, if I raise prices, aren't I going to lose customers? Well, sometimes, but generally it's not as dramatic as you might think. And a lot of times the ones that you lose are price shoppers anyway. You would have lost them eventually to the lower priced seller in the marketplace anyway. So in our example that we use, we could have reduced our sales by 25% and still had the same amount of profit in our bank account. So what does plussing look like? Well, a lot of times it might look like innovation. We've created something in addition to the base core offering that's included with our price. We can differentiate our product by adding a service to it. We can sell it to a particular type of customer, or we can sell it in a certain set of circumstances that are appealing to a subclass of customers. There are non-cost value additions that we might be able to add to it. Maybe you add a report to or a video of someone assembling your product so that they have a better idea of how to use it. You might show a video or create a video of people using the product or different ways the product might be used. All bundled. Go ahead, Kenny.
Because they do a really good job of that with those products that they sell, like the recipes, like ingredients.
Yeah.
Like, here's our recipes using our product.
Yeah.
And here's different ways to use our product, because if they use it more, they'll buy it more.
They'll buy more of it. That's right. Or they'll look for you to buy more of something else from you. So maybe the cost of your product, it includes some transformational element in it, or it creates an experience for the customer that's different than what they could find somewhere else, or that's packaged together with multiple products. I'm thinking of like cookware. Maybe you buy the Teflon coated skillet, but it already has built into it the plastic utensils or plastic cooking tools so that you don't scratch the new skillet. That's creating a bundle that's worth more than just the skillet by itself, and probably doesn't increase your costs dramatically. Again, maybe it's an informational thing that's added in there, a video, an additional piece of information that is on maybe a complementary product. Maybe you build in implementing the tool or implementing the product, or maybe you do a done-for-you service that's based around the item that's being sold. Done for you could be, we see it a lot in B2B situations where you hire an expert and they have a service built in that's a done for you. We'll take care of building out your marketing strategy with your input, of course, or some service offering that's similar to that, but it's built in so that you can increase the price that you charge for the product that you're offering to the market. So we're going to switch to tax planning for a moment, and I appreciate Kenny adding this slide here, because when I think of tax planning, everybody knows what preparation is, or tax preparation. Tax preparation is kind of like watching a sport. You watch it from the grandstand and you see it going on, or in our example, you take your information and you pass it off to your tax preparer, and they prepare what the IRS is going to consider to be a technically correct income tax return, whether it saves you the most amount of money or not. But tax planning is actually like playing the sport. It's actually getting in there and, in this case, throwing the hip toss in wrestling. And it's a sport that's a contact sport. We have to get in motion to engage people who are specialized in tax planning services. So what is tax planning? Tax planning is the process of determining the options, features, and what I call discounts that are available in the tax code that apply to your situation today or might apply to your situation in the future. So it's arranging your affairs in the most tax effective manner. It's moving dollars that may have fit in this box on your tax return to this box on your tax return to generate tax savings, legally, morally, and ethically, but finding a way to change how the information fits into your tax return. We're converting post-tax dollars to pre-tax dollars. Things like what I have on the screen here are medical expense reimbursement plans and HSAs. The medical expense reimbursement plan allows you to convert after-tax dollars that you're going to spend anyway on things like co-pays, deductibles, eyeglasses, hearing aids, that kind of stuff, to business expenses in the right scenario. We also talk about hiring your family, hiring your kids. I use the example of hiring your brother-in-law, who you're probably helping support possibly anyway. Find a way to put him on payroll or your kids on payroll so that you can pay them in dollars you're going to spend anyway. So if your kid works for you from anywhere from 7 years old on up, you can pay them up to $12,000 right now, and they don't pay income tax on that. It's earned income, so they get the full advantage of the rules that surround that. So you're moving it from your tax bracket to their tax bracket. And regardless of whether you're in the 25% bracket or the 33% bracket, either one of those, moving it to zero is better.
Right.
So if you can hire your kids to mow your yard, lick the stamps, seal the envelopes, do something in your business and pay them a reasonable wage for it, you're moving dollars that you're going to pay tax on anyway in your business from your pocket, your tax bracket to their tax bracket. Now, once it's in their tax bracket or in their bank account, if you will, they could use that money to pay for their own soccer cleats or their own private grade school or high school education. They could use it to pay for college expenses. They can use it to pay for summer camp. So now you're using dollars that were not subject to income tax at all to pay for expenses that you're going to pay for anyway. Now, I always get questioned, there's no line on the tax return that says soccer cleats. I don't care what tax return it is. You can't deduct specifically soccer cleats, but if you can find a way to put your child on payroll, pay them and have their own have them pay their own soccer cleats, haven't you just been able to buy those soccer cleats pre-tax? I think
that's pretty awesome.
One of our favorite strategies. In tax planning, we talk about funding retirement. One of the key issues that we see with small business owners is that they're not putting any money away for retirement or just very little. They see their business as their retirement nest egg. They're going to sell the business and cash out, and that's what they're going to live on in their golden years. What they should be doing is taking money every year and putting it into a retirement plan. It's pre-tax dollars. It allows us to do tax planning. You can put away anywhere from $5,000 or $6,000 in an IRA up to several hundred thousands of dollars in a defined benefit plan. And there are multiple different ways in between that fit many different business owners. The last area that I'm going to talk about here is your business entity structure. And I wrote a book called The Entrepreneur's Guide to Forming a Business Entity. And it has to do with asking questions that help the business owner attempt to identify what business structure they should be operating under. Now, depending on which operating structure you have, some tax discounts apply and some don't. Or we have to find a different way to apply some discounts, tax code rules, to your situation because of the entity that you're in. Some of the business entities can, morph as you grow. So you can take advantage of certain strategies now and certain strategies later as your business has grown to accommodate different strategies. This is one of my favorite quotes. There's nothing wrong with a strategy to avoid the payment of taxes. The Internal Revenue Code does not prevent that. This is Chief Justice William Rehnquist. And I usually, when I do these live presentations, I have another one that pops up, says yet. Who knows what the IRS is going to try to do in the future, but it's really up to Congress. Yeah. So this is something you should write down. The key to increasing your profits is to track and measure results. As business owners, you have something that looks a lot like a report card but it comes in the form of a financial statement. You get these at least annually in the form of your tax return, your profit and loss statement. But you can use those report cards or financial statements to get to know your business, and you get to decide what the criteria is for an A or B or a C grade in all these different areas. Now, some of the examples that I have here, we talk about sales. Yeah, last year, year to date, month to date, last year. How much cash should I have on hand? Did I maintain the profit margin, or what was the maintained profit margin over the time period? How often did my inventory turn? That's a key measure of how profitable a business is going to be. The more often you can turn your inventory, generally the higher your profit will be, because you're repeatedly rebuying inventory, probably taking the discount, and generating profits off those inventory turns. And the key thing is that each of these numbers, each of these criteria are different for every business. You may be able to find some statistics for your industry that you can use as a benchmark, but you really want to create your own scorecard and be able to assign a grade level based on how your company has performed. So you have a tool to measure your results. So as I said, you want to rate your proficiency towards profit margins. Take a moment to rate your proficiency. Write down, when it comes to profit margins, do you know how your profit margin is calculated? Do you know what your profit margin was in the prior year? Do you know what it is year to date? And then write down one idea that you think you can implement. Just one, simple one. And then we're back to Kenny.
Awesome, Michael. So one thing I just encourage everyone is, sometimes I know for myself, I look at numbers, I like looking at numbers, but I get involved in the taxes. I start getting into the accounting side, and I honestly can say it can be a little overwhelming. And sometimes when you're overwhelmed or you don't understand, you could just tend to avoid it. It's like out of sight, out of mind. I've got more important things to do. But really think about the impact of your business and its profitability, and that your family or your loved ones or your future, all those things really come down to having success in the numbers.
The numbers tell the story. It's all
exactly. So it's so important to just put a little bit of time and focus on getting clarity on where you're at and having a plan on where you want to go. And even if you had to start small and you said, that all that's just way too much, getting a little awareness of where you're at and then taking baby steps, because again, small hinges swing big doors. So speaking of which, earlier we looked at these success in numbers when we said, all right, here's our baseline. And what if we increased each of these by just a small 10%? Well, 10%, when you're actually taking the time to put awareness and put some focus on something and setting goals, 10% is typically pretty easy to do, because what you focus on grows. But if you really get yourself in alignment, you are very focused, proactive, and make it your goal to improve and put your energy and resources towards it, achieving higher levels of improvement are totally possible. And now I just put up on the screen the 5 drivers. If you increase them by 50% in each of these areas, what the impact does to the bottom line. And this is huge. This is going from 1,000 leads per year to around 1,500, changing your sales conversion rate from 25% to 37.5%. Transactions from 2 to 3 on average. Average price from $1,500 to $2,250. Now, those are some changes, right? But look at the possibility of what is possible. So that's the whole idea here. So we hope you've gained at least some awareness, taken the time to actually kind of give an assessment of where you're at in each of these areas. And now the next steps are, if you're seeking an advisor to help you out with your business, you're seeking some clarity on what you could do to generate more leads or convert more sales, and need some help with your marketing or sales systems. Kenny Harper here with Growth Amplifiers, being able to help you out. And Michael, if you want to speak to how you can help out people.
Yeah, if you are in a situation where you haven't done tax planning, if you think you may be missing out on opportunities to save tax dollars, if keeping more in your bank account sounds appealing rather than sending it to your silent partner, Uncle Sam, reach out to us at financialclaritygroup.com.
So take advantage of it. We do offer consultations. We're glad to provide value, and we do that because we know we can help you increase your business, help your life, give you more freedoms to do the things you want to do. And just for attending this webinar today, we're going to give you some free guides to help you get on your way and just, again, give you a little bit more focus. I know there's a lot of information, and for some people, it may be a little overwhelmed, but if you just take a little bit of time to look at what you could do in each of these areas, dramatic increases, so much more efficiency. Your business will run like an engine. So take the time, reach out, and amplify your business. Special thanks to Mike McCormick from Financial Clarity Group for taking the time out and sharing these helpful insights to our community. We highly appreciate you.
Thank you very much, Kenny. I appreciate it. Look forward to the next time.
All right. Well, this has been a nice webinar to help you guide ways that you can attract more customers to your business and increase your bottom line. Kenny Harper from Growth Amplifiers signing off.